morning, everyone. Thanks for coming. My name is Weihs. I'm the original founder and chief exec of XLMedia. We're a relatively new company to the market. We just listed on AIM in March this year. We had a very significantly oversubscribed IPO. We're a growth company, cash generative. And what I'm going to try to do in these very short 15 minutes, which I usually have to squeeze to 55 minutes with institutionals, so you're going to get the shortened version, is really try to explain the company. I'm going to, of course, deal with financials as well, but that's more for you to judge. I want you to come out of here knowing that you understand what it is that we do, because in all honesty, there are no similar companies currently traded, not on AIM. There are real money gaming companies, but no marketing companies focused on that field. So what are we? We're an online performance marketing company. When I say performance marketing, I mean that we work predominantly on performance-based models, as opposed to traditional advertising models in which a client comes to a marketing company, pays them a large amount, they leave a fee behind for their services. We share the risk with our clients. And I'll explain later on in depth what performance marketing actually is. What is it that we do? We track paying users from different online and mobile channels and direct them to our clients, which are either online real money gambling operators or social gaming operators. Now, the real money gambling operators you most probably have heard of, from the high street names like William Hill, Bet365, Ladbrokes, etc., to less known operators, but all of them within fully regulated environments. Some in the UK, some in Scandinavia, some in Malta. Quite a varied business. Our vision is to continue being what we believe is one of the leading traffic suppliers to the gambling and the social gaming industry, and expand what it is that we do both methodology-wise and platform-wise. And when I say platform, I mean predominantly mobile, which beyond being a very big buzzword, is actually where this industry is going. And we'll speak about that. In this slide, I really want to try to simplify the business model. And as you can see, we have three main divisions. The main one, and before I go to each one of them, I'll explain that the whole concept of the company is driving users. Real money gambling operators need sports bettors, they need casino players, they need poker players, bingo players. Social gaming operators need installations. And what we do, we do the acquisition services for them. And I'll explain very soon why it is that they choose to outsource their acquisition services. Even though the model is not particularly outsourced, we become partners with them. But as I said, the main division that we have is content and search, which currently accounts for approximately 55% of sales. And what we do in this division is we own, run, develop, and optimize a network of more than 2,000 sites in 18 languages. Now, this network is predominantly informational websites, either a casino site or a poker site or a sports betting tip site, you name it. You'll be surprised that people actually want to read things about strategies for bingo, which for me sounds a little bizarre, but apparently there are people that want to read this. Now, beyond the fact that we're very much spread geographically and content-wise, there is an added value in this division. And I'll be very straightforward and say that this is content and search and what's called search engine optimization. It's something that's been done in the online industry for many years. But very few, if at all, companies have managed to do it extremely successful in such a large volume in a very competitive field like real money gambling. And this is something that we've done for more than 10 years. And the reason we've done it is we took away what we believe is the, let's say, intuition approach here. It's completely non-intuition based. We've developed proprietary systems in-house that allow us to work in, let's say, a portfolio of up to 40 or 50,000 words per language. And I'll give an example. I know I'm a little short on time, but I'd like to dive into this because I think it's interesting. If let's say, for example, you're targeting real money gamblers from the UK, so obviously if you go and rank a site first place in for the word online casinos in Google Co UK, you're going to make money from that. But it's going to cost you a fortune. It's going to take a long time to get there, and it's going to be very saturated and difficult to stay there. But if you run some kind of query, usually based on data mining, and find out that the expression Swedish online casinos allowing Visa cards issued by Handelsbanken. Okay, there's about 3.5 people per day that are going to look for that, but the good thing about it, the 2 of them are probably going to go gamble right away. Now, if you take this rationale and multiply it times 18 languages and 40 to 50,000 words per language, you have a very valuable BI here. We also go for the trophy words, online casino, poker, sports betting, sports tips, etc. But this is part of the success rate here, as well as publishing very good content. Google, by definition, has been very aggressive with publishers of bad content over the years. We took a very different approach. We publish interesting informational sites that users like to re-engage with. This is one of the models. The second one is media buying, which currently accounts for approximately 29% of sales, but this is the channel that we see growing the fastest over the years. Content and search is definitely a cash cow. It's growing, but the faster growth is going to come from media. And media buying is basically an umbrella name for any kind of traffic that we can buy. If in essence, content and search is free traffic, the only cost there are the human resources, knowledge, systems that we develop, but the profit margins are much higher. Here we're actually paying for traffic. Where are we paying it? We're buying it from Google and AdWords. We're buying it in social networks such as Facebook and Twitter. We're doing display advertising, banners, pop-up, etc., email marketing, and mobile, which is a big thing. Now again, media buying is not something that we've invented, but we've been doing it very intensely for the last 5, 6 years. And we've developed systems that allow us to do it very efficient. There were many companies that came to market that specialized only in online advertising technology in the last few years. They do it as a service giver. We've developed our system to use it in-house, and we feel that that served us very well because, as you'll see soon, we're a very fast-growing company with very good profit margins. And we've been cash generative since the beginning, no debt whatsoever. We've been paying dividends for about 10 years. So we're a company that keeps growing and very cash generative. And the reason for that is kind of the model I mentioned before, that we are a performance-oriented company. And I'll speak about media buying separately. The affiliate network, last but not least, is currently about 16% of our revenue. And what I would like to mention there is the affiliate network is basically, we developed a system that allows us to offer smaller companies such as ours the ability to work through us and promote our partner clients. We work currently with more than 120 online gambling operators, most of the, let's say, relevant ones in the industry. And why is this good for us? First of all, we're making a margin. We get the benefits of scale, and we get very valuable business intelligence by effectively having our competitors working through us. This is something that proved very well for us. Now, all these three divisions, these are, I would say the analogy would be a production line. And the product that's made in this production line is paying customers, high-value paying customers for gambling operators, which are then referred to the operators on the right-hand side. Many of them, some of them you know. For example, Play to Camplarium are social gaming operators, many of the games you see on Facebook. And what we get in exchange for that, we get some kind of performance-based model. Now, this could be either lifetime revenue sharing, which currently accounts for about 75% of our revenue. Now, important to mention, this is lifetime revenue sharing. As we refer a player, and if this player comes and plays in 10 years, we're still making money. This is something we're seeing. We're seeing players that were referred in 2004, 5, and 6 still making us money. And then we have different kinds of models. For example, CPA, which stands for cost per acquisition, in which we would get paid a fixed amount of money when a user refers. We refer performs a certain action. It could be deposit $50, play 20 hands of poker, or wager 50 pounds on sports betting. Now, I don't like to stay too much on this slide because it kind of speaks for itself, but what I would like to mention is that we've been growing very fast over the years. We've absolutely no debt. We have been profitable since the basement, and now we're a company of more than 170 people spread across 3 countries. We're seeing very good growth also in 2014. As you can see, 2013, which was a pre-IPO year, was a year we invested quite heavily in infrastructure. And we're seeing the benefits of this now. We're going to publish our results on Wednesday, but as we've issued a trading update quite recently, we have seen a top-line growth of at least 22%. And this is regardless of the fact that we became a PLC, which of course brings its own cost. So we're seeing a very profitable growing business, and now even more based on this investment in infrastructure that we have done. We've been paying out dividends. We paid our maiden dividend in May for 2013. So of course, any investors that came in on the IPO benefited from our 2013 numbers. The model, by definition, drives us to be success-driven because we share the risk with our clients. Now, I will reiterate, because I just noticed I missed that, is that because we work in performance-based models, in a traditional model, let's say William Hill would need players. So William Hill would come up to us and say, okay, here's £1 million, spend £900,000 and leave £100,000 behind as a service fee. That's not the model. The model means William Hill will come up to us and say, we have a great sportsbook, you really want to advertise it. And we'll evaluate it, and if we believe they really do, we're going to spend our own £1 million. And hopefully we'll get £3 million in lifetime revenue sharing or CPA. Now, historically, our margins have been extremely high, especially in content and search. In media, we're seeing, say, a bit lower margins, but still in the upper 20s. Now, as a group, we're in the mid-30s, let's say close to 40% margin, which is not a very common thing to have a high-growth, very, very high-margin business. Going forward, and this is something I'm going to speak of, we expect the margins to decrease a bit in the media, but for a very good reason. As you may have heard, gambling is being regulated in many countries. UK already a regulated environment. France, Italy, Spain have regulated. The US, which is a big opportunity going forward, is going towards regulation. A regulated environment brings many opportunities. Many channels that we couldn't advertise before, now we can advertise on. Now, of course, smaller margins, more competitors, but much more volume. And what we're seeing, and this is important to mention, that absolute-wise there's a growth. We're seeing much more volumes on slightly smaller margins. We actually forecasted a bigger decrease in margins than we actually had. So it's a very profitable business in the media department. A bit generally about the online gambling industry. Obviously, it's a very large and profitable business. It basically always has been. And I think the two things that are important to mention is that we deal with all aspects of the industry, as in real money gaming, social gaming, poker, casinos, sports, bingos, slot machines, you name it. But I want to emphasize, because many questions I get sometimes is, why don't you operate a sportsbook? Why did you focus to deal only with the acquisition part of it? And I give the 1 minute food chain speech that I think today I have about 30 seconds to do it, so I'll try to make it quicker. Basically, if tomorrow you want to launch a sportsbook, or launch a casino, or launch a poker room, it's very easy and quite cheap. 3 phone calls to, let's say, UK regulator, Isle of Man, or Alderney, you've got a gambling license and after 20,000 pounds. 1 call to Playtech, Microgaming, or Net Entertainment, and you have a software. And 50,000 pounds and 2 weeks later, you have a functioning casino. What do you do with it? What actually differentiates all the high street bookies, smaller independent casino and poker operators, is how many clients they bring in the door. And that is what it is that they struggle with. And the proof is the fact that, A, we've been growing very fast over the years, but we've just also been growing the client base. We have absolutely no churn. We share the risk with our clients. This is a risk-free model for them. They're spending their own money, but they benefit. And the proof is the fact that average revenue sharing rates for us range between 35 to 55%. So in some cases, we actually make more money on a player's activity than the bookie themselves, which comes to show how much they do appreciate the importance of acquisition. One more note that's important to take from this slide is mobile and tablet growth. Again, big buzzwords, but fact. The fact is that more and more activities done via mobile devices. In my opinion, sports betting is completely a natural activity to do on your mobile phone or your tablet while watching a football or a basketball or a cricket game. And we're seeing this as well. We've invested heavily in mobile infrastructure. We advertise much more in mobile than we have before. Our recent main acquisition on the 1st of September, whoever's following us must have seen this one. We acquired a company called Excite Digital Marketing, and they deal predominantly with social gaming, but in a mobile and social environment. More than 50% of their activity is mobile. US, I'll speak about them separately. Now, where's this company going? It's grown fast over the years. We expect it to grow more, but I'll separate both into organic and acquisition-based growth. Now, what's important for me to mention, we did raise a significant amount of money, and people expected us to acquire things right away. And some people came to the booth, and I talked to them about this, and I said, we're being diligent, because we don't need acquisitions to grow. We do them because we can, and it's a fragmented market space, and we are the natural consolidator. But this business has been growing organically. Our first-year results this year, our half-year results for this year have been completely without acquisitions. So we've managed to reach our forecast, which we feel very comfortable about, regardless of the acquisitions. Currently, we've made 3 main acquisitions that have been published. And the common denominator of all of them are regulated environment focused. We've bought 1 network in Denmark, 1 network in the UK, and the social gaming environment, which has no regulatory issues whatsoever. And they're going to come into effect in the H2, as well as the next couple of years. And just recently, we've upgraded our forecasts. We feel very comfortable about that. But organically, we've been growing. We've been growing in markets outside of our historical focus, which was Scandinavia, English-speaking countries like Canada, UK, and Australia, and German-speaking countries, to name a few. As I said, we've invested significantly in mobile technology and media technology, campaign optimization. We're going into new channels. I mentioned EDM, which is social gaming, and I'll be happy to answer more questions because it's a topic not many people know about, but it's a very big business. And just something that goes back, our knowledge in technology is rather generic in the sense, not that anyone can create it, but it can be used for almost any kind of product. We choose to focus on real money gambling and social gaming because it's extremely profitable, and we love doing that. But we could and we sometimes test things like financial services, like dating, like other kinds of games. And this is important to mention that it could be used for that. But there's no intention currently to refocus the company outside of the gaming scene. US opportunity, the US is about to be regulated. I think I'm very short on time. Yeah. The US, of course, being a very interesting market, has been closed since 2006. Nevada, Delaware, and New Jersey have already regulated. We did not forecast any revenue from the US for 2014 and 15, which was good for us because we're anyway making revenue from there, because we have an agreement, for example, with Caesars Interactive, Caesars being the biggest brick-and-mortar casino group in the US. And we're using this time to make infrastructure investments and acquisitions at very attractive multipliers in the US to be prepared. As I mentioned, the acquisitions, I think I went through it, but EDM specifically, immediately earnings enhancing, as were the rest. We feel that there's many more acquisitions that we're looking at. Honestly, for this year, we're not looking to make another big one. We're looking to make maybe a few more bolt-ons, maybe one more bolt-on this year and a few more next year. The rate of one big acquisition per year feels very comfortable for us. We have the infrastructure to integrate these businesses quite easily. And to summarize, 2013 has been a very good year for us, a year of investment in infrastructure and growth. 2014, we're reaping the results. Sales momentum in our core business is strong. Our clients want more of what we offer. We're recruiting new clients with absolutely no churn. Our recent acquisitions will help us grow the business both strategically and tactically within the environments that we're working in. The recent entry into the social gaming scene is a great opportunity for us. Social gaming, completely no regulation issues, 50% mobile, US, open up, great business for us. And we feel that as a cash-generative, debt-free company, we want to reward our shareholders for being shareholders, and we've been paying out significant dividends over the years. We've declared a minimum 50% policy. Myself, as a shareholder, I'm very happy for this policy, and I'm going to keep pushing for it. And I'm sure there'll be somebody in the room that shares that with me. And I'll be happy to answer more questions. There are copies of the presentation over there, as well as the updated research notes from our house broker. And we'll be at the booth all day. If anyone wants to ask anything, I'll be happy to answer. Thank you.